Good. Well, morning, everybody, once again. I know you have a busy day. Many of you are rushing down to Parliament later. I'll listen on the radio and read your reports tomorrow. So today, we want to report on the March quarter. So this is the end of the fiscal year. And what we find is that the primary balance was 120.8 billion against a target of 120.7. So just in excess. And that means that we would have achieved the quantitative targets for December and March, which covers the 11th and the 12th review of the IMF extended fund agreement. This means that we, in combination with the structural adjustments that we would also have executed on, are likely to get a nod from the IMF staff review, which is currently being undertaken by the team which is here. So I want us to just stop for a minute and think about it. Jamaica would have passed the 11th and 12th quarterly review. So that's 3 years of the IMF program, and we would have passed every quarterly review of this program. Quite remarkable, I would say, for a country who wasn't given much of a chance when we started the program in March of 2013. I think it speaks to the dedication and the sacrifice that the Jamaican authorities and Jamaican people have made in this program. Looking at the year's performance, more specifically, we see that on the tax revenue side, performance was really quite good. They almost hit the target dead on. They did about 412 billion against a target of approximately 412 billion. So the tax authorities seem to be getting quite accurate in their forecasting and delivery of the numbers. So I'm very pleased with that performance by the tax authorities. On the non-tax revenue side, so this includes things like interest from the Petro-Carib agreement, dividends, fees. They actually overperformed quite significantly, doing almost 36 billion against a budget of 31 billion. On the other hand, the bauxite levy underperformed quite dramatically, did less than half of what the target was. The bauxite levy amounted to 2.1 billion against a target of 4.8 billion. And can you imagine, for those of us who are old enough in this room, to know when bauxite in its heyday was really a major contributor to the Jamaican economy. And today, all we're getting out of it is a 2.1 billion. Grants, again, are underperformer, 5.5 billion against a budget of 9.5. And I think that when we look on the budget for this fiscal year, the new fiscal year, we'll have to look very carefully at what that grants number is, because for 2 years in a row now, it has underperformed the budget. On the expenditure side, government was able to hold expenditure to 2.3 billion below the budget, notwithstanding the wage component being 3.6 above budget. So recall that the wage settlement with civil servants turned out to be a little higher than expected in the budget. And so they had to curtail expenditure considerably. So overall, 2.3 billion less spent on the expenditure side, despite the 3.6 billion overspend on wages. Looking at some other economic news, Statin put out inflation for March, turned out to be minus 0.1%. This comes on the heels of January, which was minus 0.5, and February, which was minus 0.7. All of those quite remarkable inflation numbers really are due to world energy prices, as well as the recovery of agriculture. We've had pretty good rainfall in the last, I'd say, 4 or 5 months, and that is showing itself in agricultural prices. So between agricultural prices and energy prices, some cereal prices to a lot of corn and so forth has been pretty low on the world commodity markets. And so that has allowed us to have a first quarter from January to March inflation rate of minus 1.3%. The Jamaica Chamber of Commerce, as you know, puts out a quarterly survey of business and consumer confidence. And the survey that was done in March of this year showed that the business confidence at 144.6 is the highest it has ever been for 15 years of doing the survey. I think that is quite notable and is supported by the consumer confidence, which is at 147.9, and it's the third highest level that consumer confidence has been at in the last 15 years. So both of those indices are moving in the same direction, which is up. And the business index in particular seems quite buoyant, and that's a very good sign, I believe. Tourist arrivals, stopovers, which are the important components to watch, 2.9%. It's up 2.9% January and February of this year compared to January and February of last year. Not a big number, but nonetheless a significant number. If we want that number to be bigger, we're going to have more rooms in the island. So growing tourism by digits that are like 6, 7, 8 require us to be bringing on board more rooms each year. I believe that we have a number of rooms slated to come on this year, so barring any circumstance, whether natural, like climate, hurricane, or global, financial, or, hate to say it, acts of terrorism, we are likely to see a fairly strong tourism season this year as the rooms come on board to help with the growth of stopovers. Nonetheless, cruise ship arrivals up a big number, 25.7%, and that's a very notable development. All right, let's take a minute and just look forward. The primary balance for this fiscal year, so April 2016 to March 2017, is 120.9 billion. Almost the exact same number as it was for the fiscal year that was just finished. And that is because the primary surplus is now 7% of GDP, not 7.25% as it was for the previous year. So we're shooting for the very same number in dollar terms as we achieved in the last fiscal year. I guess on that basis you could say that passing the IMF test for the next 4 quarters should be doable. And I think it is quite doable, all things being equal. I think the tax authorities are becoming better at the job, and if the economy does show the kind of growth that has been budgeted, then we should be able to meet that fiscal target. Nonetheless, there are a couple of challenges that we need to be aware of. One is that there are a number of important structural reforms that need to happen in this last year. Serious tax reform is going to begin very shortly. There is a specialist team that is coming to Jamaica from the IMF to look at the tax situation and to propose further reforms to the tax system. There is central government pension reform, which is likely to go back to Parliament shortly. It was on its way to Parliament, I believe, before the elections interrupted it. It has to step back, I guess, clear cabinet, whatever that pre-parliament procedure is, and then go to parliament again. So it's almost ready. It just needs to be reviewed and ratified by the new government and then go to parliament. So that is quite imminent. Then there's a public sector transformation, which is trying to make the civil service leaner, tighter, more efficient. That process is to begin in this fiscal year also. And there is labor reform, which needs to be started also in this fiscal year. So 4 fairly deep and important pieces of reform that need to be begun or completed in this fiscal year. So although the number of roughly 121 billion looks achievable, those reforms also have to be achieved to pass the IMF test. The other thing that I want to say in regards to passing the next 4 tests is that we are going to, although this is outside of the next fiscal year, beginning in April of next year, we have about a $14 billion increase in expenditure, which is consequent on the additional 500,000 in tax threshold that is to be given. So in this budget, there's $12.5 billion that has been given to take everybody up to about $1 million tax threshold. Going from $1 million to the $1.5 million is another $14 billion. And so we'll have to fund that in April of next year. In addition to that, for the last 4 years, we've been drawing down $11 billion a year from the NHT. And that has helped to fund the budget and to meet the primary surplus. That agreement ends in March of next year. And so that agreement would either have to be renewed. What's involved in that, I'm not sure. That's something that we could look at for further discussion. Or we have to find some other way to plug that gap of the 11 billion plus the 14 billion from the additional tax threshold. So we're looking at a potential $25 billion challenge in the next fiscal year. So why am I speaking about that from now? Because it's a big number, and we have to start thinking about it and crafting the way in which we are going to deal with it from now. So although it falls outside of the IMF program, because the IMF program really terminates in March of next year, nonetheless, for we as Jamaicans, it is a challenge that will be there, and we will have to meet it. So let me say, in conclusion, I think that it would be true to say that generally confidence is high, and certainly my attitude is positive and quite bullish. And I think that Jamaica continues to be on the right road, notwithstanding the challenge that we had with meeting that gap created by the threshold. So that having been done and behind us, I feel quite bullish about the future for the country. However, I would say that we have done well in the past 3.5 years because we have had a strict IMF program. And what the IMF program has done is held our feet to the fire and made sure that we did all of the right things, because it is so easy to not do the right things and do the popular thing. And so my confidence beyond next year is going to depend a lot on us having a continuing program with the IMF. It doesn't have to be the same kind of program that we have now. In fact, it's not likely to be the same kind of program. but it needs to be one that works with us to set targets that are achievable, but most importantly, are on the path to getting our debt down to manageable levels. It must be a plan that sets out milestones that we can measure our performance against. It must be a plan that has sanction if we breach achieving any of those targets. So my confidence would be made even greater if during the course of this year it was disclosed publicly that we intended to discuss with the IMF a new program to continue beyond March of next year. That program to be negotiated and discussed, the specifics of between the government and the IMF staff. Thank you very much.